If you've been trading for a long time but your account is still flat or slowly drifting into loss, the problem isn't the market and it isn't the strategy. In this video, I'll show 3 simple principles that help stop losing money and protect capital without complex schemes or secret indicators. We'll move straight to real trades and break down where most traders end up hurting themselves. Why having many strategies leads to losses? A very common mistake is constantly changing strategies. One today, one another, a new one the day after. It feels like you are looking for a better solution, but in reality you are just losing control. Every new strategy brings new emotion, new doubts, and new mistakes. Losses don't come from the strategy. Losses come from chaos. There should be no chaos, there should be calm, analytical thinking, and then you'll trade in profit. I don't believe in some universal recipe for making money. That's a fairy tale. I believe in principles that work in any market conditions. It doesn't matter whether you trade 1-minute charts, 5-minute charts, second-based time frames, cryptocurrencies, or indices. If their principles are followed, your balance survives. If not, even the best strategy won't save you. Again, in different situations, an uptrend, a downtrend, or a ranging market, the same strategy may not work. So you should have at least 3 basic scenarios. One for an uptrend, one for a downtrend, and one for when the market is ranging. Then you will trade in profit. Why look at results over the long term? 1 trade means nothing. 10 trades don't mean much either. Only the long-term distance matters. If you treat every trade as the last one, you already lost. Wins and losses are just part of the process. The balance is decided by a series of trades, not by a single entry. Now I'll move on to practice. I choose a currency pair, look at the payout, and select British pound and dollar. I look at the 1-minute time frame. There was a drop, and now the market is gradually stabilizing. Price will likely move toward these levels. We can open a buy trade, but first we wait for a pullback. It will dip slightly. We open a buy and wait, watching how the situation develops. The main reason for blown accounts is emotion, not fear or greed, but the absence of rules. You must have clear rules and proper risk management. If you enter a trade unsuccessfully, you must have a predefined limit on losing trades. For example, 2 losing trades. That's it. You change your logic, change the currency pair. Don't use martingale to increase position size for 5 or 6 trades in a row. If something isn't working, you must change your logic. Don't trade emotionally. Don't try to punish the market or get revenge. In the long run, this works very poorly. A few losing trades are much better than a long losing streak. It's important because a few losses can be recovered if you change your logic and approach. Even a small victory, breaking even, is already a win. Remember this. Now we are closed in profit. Our logic worked and we entered to buy from the level in the direction of the trend. Most people don't understand that breaking even is a win. They want to make money immediately, and because of that, they start forcing the market. But professional trading is first about not losing. If you preserved your balance, you already won the day. I want to tell you that I have a Telegram channel where I talk in more detail about strategies, share some of my techniques, and show different examples. We talk a lot about trading and economics and how they affect the market. There's a lot of useful information there. Subscribe, the link is pinned. Write comments, I'm always happy to answer your questions. If you are not confident about a trade, it's better not to enter. That's already the right decision from a strategic point of view. Nothing bad will happen if you miss a trade. What's dangerous is entering without confidence and then starting to panic. The best trades are the ones where you feel calm. Right now a bullish candle is forming. I'll wait for a small back and then open a buy. Because there was a strong breakout upward, price will dip slightly, but it will still likely move toward this level, so I am calm. Even if we close the trade in loss, we can recover it using martingale, but again, without abusing it and using common sense. If you approach everything calmly and rationally, stable profit will follow. A strong upward breakout is happening now and price continues higher. Great. It will likely reach this level. A reversal might occur here. No, I think it's breaking through. I think it will hold confidently. We waited for a small back, not a large one, because the market is forming fairly large candles with long wicks. Those shadows are a signal to trade in the direction of the trend. I want to say that I often trade on the 1 minute time frame. I don't like very short time frames, 5 seconds, 10 seconds. They destroy deposits not because they're bad, but because they amplify emotions. If you don't have discipline, second-based time frames will eat you alive. You'll start reacting emotionally and clicking buttons chaotically without understanding what's happening on the chart. I want to protect you from that. That's why I emphasize this. Why are higher time frames more stable? The larger the time frames, the less noise. The less noise means fewer emotion. Fewer emotion means fewer mistakes. It's very simple. One more thing I want to highlight. A deposit that's too large creates psychological pressure, while a deposit that's too small encourages excessive risk. You need to choose a deposit size that makes you feel calm. How much money do you really need to start? Exactly as much as you can afford to lose without panic. Anything more will only add stress. So we increase the deposit gradually, don't take excessive risks, and trade with a cool head. As you can see, today I had 2 successful trades. I relied purely on technical analysis, levels and candles. So, what's the conclusion? What are these 3 ways to avoid going into loss? Let's summarize. If we remove all the theory, noise and informational nonsense, only 3 things help me stay out of loss. First, control yourself, not the market. I don't try to predict the market. I control risk size, the number of trades and my mental state. The market can do whatever it wants. My job is not to break my balance. Second, trade the long-term distance, not a single trade. One trade solves nothing. A series of trades does. I don't care how a specific entry closes. What matters is that by the end of the week or month, the balance is alive and profitable. Even when some trades go into loss, I already know how I will act. And the third point, trade without emotions and without rush. I enter only when I'm calm and confident. If there's doubt, I don't trade. If there are emotion, I take a pause. A pause is also a strategy. In trading, money is made not by those who guess more often, but by those who make fewer mistakes and know how to preserve capital. If you like this video, write in the comments. We'll do more practice and more breakdowns. I remind you that I have a Telegram channel where I share strategies, techniques and access to copying my signals. There's a lot of practical and theoretical knowledge there, and it will definitely be useful for you. I'm open to dialogue, so feel free to write. I was glad to see you in today's video, and I'll be glad to see you in the next ones. Have a great evening. Bye!